Welcome back. This is our special budget coverage on CNBC TV 18. We've been telling you what's come of the budget, what's the positive and what's the negative, although there is nothing very much negative which we've been able to pick out so far. Usually about 2 hours, 2.5 hours later, you know, tax experts, and we've got many here in our studios and our offices who are poring over the finer details, will come up with this or that, you know, which is like, for example, last year there was, you know, that big googly that the benefits on debt funds were removed. I mean, the grandfathering relief was removed for debt funds, but this time around, at least so far, there is nothing as such. Markets have come off quite a bit from the day's lowest point, and we are down only 20 points or so, 23,490. And of course, what's doing well is consumption and all kinds of consumption names. Even I saw Swiggy, Zomato, etc. surging quite a bit. So that's the picture. Well, we've got my colleagues joining in as well. Reema is here, Nigel is here, Mangalam. You guys were holding the bull by its horns, guys. And
I think one of the horns of that bull worked. That's the one in the green.
I mean, consumption is the story today, Mangalam.
Consumption is totally the story. You know, everyone was hoping for some boost coming into consumption itself, and that's largely because urban consumption had been struggling. We've been hearing from companies over the last couple of quarters, etc., as well. So we'll leave it to the tax experts to find out the exact benefits. But speaking from what the finance minister had said, and quoting her speech itself, zero income tax incidence for people up to 12 lakh rupees. That saves them 80,000 rupees annually. Income tax of 18 lakh will now have to pay 70,000 rupees less in terms of annual taxes, and income of upwards of 25 lakh rupees will save 1.1 lakh rupees annually in terms of taxes. That's roughly 10,000 rupees additional that people have per month for people upwards of 25 lakh rupees, urban dwellers that are. And as a result of which, all these urban consumption plays, the likes of Zomato, Swiggy, Nykaa, you have the likes of ABFRL, which is the biggest gainer. You have Trent, which is doing extremely well as well. So the urban mass consumption spaces are doing extremely well. Premium was doing well already. And even in staples, if you look at something like a Nestle, 75% of their revenue comes in from urban India. GCPL, which is among the bigger gainers, 70% of their revenues come in from urban India. We have Britannia, Marico, all of them, nearly 2/3 of revenue as well coming in from urban India itself. Add to all of this, you have ITC, which is doing extremely well as well. Why? Because before every budget, there's a fear that there could be an increase in tax incidence out there as well. That's not come by. But most importantly, the FMCG sector had been underperforming for the last couple of years. If you look at, the valuations as well, if you look at names like HUL, you look at names like Britannia, you look at names like ITC itself, Nestle, Jubilant FoodWorks, all, the table comes up for you on the screen. If you compare it to the FY26, their current FY26 price to earnings, 1 year forward price to earnings, and look at it from a 10-year average basis, they've come down to the mean. And in cases like HUL and Dabur, they're actually below the mean as well.
So there is that,
valuation,
comfort as well.
Yes, comfort as well. And then add to that, you had big gains in capex and infra-related themes earlier. If there has to be a sectoral shift coming by, then it has to be the consumption space.
Will this cause that sectoral shift is the question. And we'll get to, the other sectors as well, one by one. Insurance, Yash is also standing by, and we'll bring him in. But I think we have Ramdev Agarwal now joining us, chairman and co-founder of Motilal Oswal Financial Services. Ramdevji, good to have you with us here. Good afternoon. It's been a couple of hours now. Budget, I'm sure your team has briefed you. You've poured over all the important things. What's the sharp take at this hour, according to you? Is it how would you rate it if I were to rate it on 10?
10 out of 10 for sure. If I could give 10.5 also. So it is definitely 100 out of 100 budget. First thing is there is no negative. Right. Okay, at least as far as I know, there is no negative. So which is a big positive. Second, that whatever they said in economic survey, everything has given, it has found some space somewhere. So I mean, now insurance is 100%. That shows the kind of intention to attract capital into the country. Then they have also talked about global competency centers going to the tier 2, tier 3 cities. That's a very big revolution in India. I mean, it is after IT, GCC, evolution of GCC is very large. So I don't know what all they have done.
Yeah. No, absolutely. We'll get to some of those things in a bit, but for our market audience, right? What Mangalam was talking about, how much of this is this a boost on personal income via personal income tax route enough to spur meaningful growth for listed companies, and where would that show up in a more meaningful way according to you?
Yeah, so I think clearly I'm not in a position to figure out when you get about when your income level is about say 20 lakh or 24 lakhs and you get a benefit of about 70,000-80,000 rupees, where does it go? My sense is clearly there will be that money will tend to go into the consumption, and that's what market is betting on. So I would go by the market judgment that that consumption will, particularly the FMCG kind of item or Zomato and all who sell small ticket items, they would get benefit clearly.
Mr. Agarwal, afternoon, this is Reema here. Now, CAPEX infrastructure was seen as a multi-year, multi-decade kind of a story for India. But given what we've seen over the last 2 years and the thrust now on consumption combined with the welfare schemes announced by the government in the last 12 months, is there a shift now in the narrative from CAPEX to consumption? And therefore, should you step back from the CAPEX-related themes as a multi-year story, especially after the kind of returns they've generated?
Yeah, so I think as far as the economic allocation is concerned, that remains same, just that the market was sitting on the capex side, and there is a shift in the allocation. And in fact, we were saying that economy is growing at 7%, 7.5%, but there's no feel on the consumption side, anything of that kind of a growth. So now that consumption, which was completely amiss, there is some money which has been put in the hands of this middle class. And because if you can't increase the income, you have to reduce the tax so that people can buy some more. And other way was to reduce the cost of the goods by reducing the GST and all. So that side they have not done. So they have put some more money in the hands of consumers. And see, real benefit is going to come from economic growth. Will they go from current 5.5% kind of a growth for last quarter? Will they again go back to more like 7%? The real benefit will come from there, and then from there allocation will happen.
No, fair enough. But what about the CAPEX story? Is there a change? Would you continue to allocate the same amount to the CAPEX infrastructure-related stocks, your defense, railways, etc., as before?
Yeah, so we will, of course, there will be reallocation of the resources. Ultimately, the fund manager has only $100. So out of 100, if I remove 10 to the consumption, obviously the 10 will come from the capex side. I mean, if I say the capex and consumption, there are only two buckets. In that case, if I increase the allocation to consumption by say 5 or 10 rupees, that will come immediately will come from the capex side. Though the story has not changed for capex, but the story has improved for consumption. That's how I look at it.
How much do you think for a lot of the consumption companies is in the price? Because when we speak about urban consumption, there are names like Zomato, Swiggy, Trend, etc. They are trading at high multiples already. It's the staples which are actually trading at 10-year means. So in that case, the incremental allocation to consumption itself, does that go to consumer discretionary urban consumption, which is already trading at elevated valuations? Or would you look at staples as well? Because now that rural is improving and there is some push to urban, maybe that makes a better value bet.
Yeah, so I think as far as the stock selection is concerned, it's also a question of at what price you are buying and what you are buying. So those things are about the stock picking. But broadly, if consumption is going to happen, where is the actual value lying? Say, I would think that all the digital companies, quick commerce companies, that's a good place to, if they get a little more booster, I would rather spend there than the 70, 80, 100p old companies, where the growth rates at best will be 10, 15%, whereas here it is like 70, 80%. So that's a matter of choice. This is what I'm saying, but somebody else will have some other view.
Right.
But clearly, consumption companies, if yesterday it was worth 100, today it is worth 105. That's what market is saying.
And another way of playing consumption is also via autos and some of the consumer finance companies.
Yes.
Would you bet on any of those as well, or maybe you will look at just some of these new age consumer focused, tech focused consumer companies itself?
No, I mean, see, I don't manage money, so of course managers will go deeper into the thing and they'll talk to the companies, and just that little provision has come in the budget. It doesn't mean much overnight. I mean, Monday, a lot of things will get equalized or things like that. But I mean, individual companies are very important. So and there is going to be a lot of second-tier effect. Like the entire tax benefit is not going to flow into just the consumption companies. That in fact the capital markets can benefit significantly, because the lot of people who are well off, say about 25 lakhs and all, they're not constrained by the income for the consumption. The incremental a lakh rupee comes to them, that a significant portion might come to the capital market. So we'll further examine. Right now we are just in the in the mood to react to what is given. Just that there is no negative and positive tailwind is there for consumption, auto or things like that. So that's how market is sentimentally moving that side, because there is no seller there. There is only buyer. On the capex side, there is no buyer, there are only sellers. That's what is reflecting right now in the market.
All right.
The real rational movements will start happening next year.
And, okay, no, absolutely. You said that your fund managers will speak with companies and figure out exactly what is going on. You may want to listen in, Ramdevji, to this next conversation, because it's a space where a lot of the fund managers, your fund managers, have been bullish as well. EMS, right? And Dixon is the leader. We have Saurabh Gupta, CFO at Dixon, joining us. The Dixon stock saw almost about a 1,500 rupee swoon. It sold off very aggressively and then it basically came up very sharply. Saurabh, good to have you with us here. The basic custom duty on open cells has been sort of brought down. Whereas as far as flat panels are concerned, the customs duty has been taken up. This is at the margin. How does this affect you, Saurabh?
Yeah, so definitely interactive flat panel display, the duty going up from 10 to 20% is a big positive for us, because we have been manufacturing this for last 1 year. So this will trigger more domestic manufacturing, and we manufacture for some of the marquee brands. And this is a good industry. So we think this is a major positive for us.
How major you think, Saurabh? Can you, any way to kind of quantify this? How much was coming in, and how much of that import will now become unattractive?
So my sense is this is broadly a 5,000 to 6,000 crore industry in India, and large part of it was service to imports. We also had a small revenues coming in last year, but definitely this would now trigger a large part of import substitution, and we should have a decent portion of our revenues in the next 1 year should start coming from this category.
Mr. Gupta, afternoon. Any other measures that have been announced in the budget which impact you, and if yes, if you could explain?
Yeah, so duty has also been cut on some of the mobile parts. We are also examining it, but that is also a big positive, because if India has to be competitive and industry has to be competitive as far as exports are concerned, because we're already exporting some of the duties, high import duties that were levied on mobile phones. So that is a big positive, especially when we have all the brands with us on the Android ecosystem, and we are already exporting for some of the brands. So this is also add to the competitiveness of our industry and for us.
All right, so sort of just net, we want to understand, going by the kind of volatility that we saw on the stock price today, you're not seeing any negatives in this budget for Dixon. In fact, every statement that you've made it's positive, right?
It's positive, and this 12 lakh relief also is a big positive for us, because demand lately has been slightly subdued. I think so this would really trigger that positive sentiment and demand in India.
And that open cell bit, Saurabh, that is also something.
That is also positive, because the parts of open cell, especially for the TV parts. So we also manufacture, do the display assembly for mobiles, IT hardware, and hopefully in TV we had thought in future. So if the parts come at a lower duty, that also is a positive for us.
Right. And what about capacity? I mean, for the incremental demand that you foresee coming in on account of import substitution, do you have the capacity for the same?
Yeah, we already have a capacity for this, especially for this interactive flat panel display. We already have a capacity in our Tirupati plant. And for the display assembly, we are setting up a unit in Noida, which hopefully should be commencing operations by Q2 of next financial year.
Just for better understanding, what proportion of your revenue comes in from a product like this?
So as of now, it's a small revenue. It's around 200 to 300 odd crore revenues. But clearly, we see that the industry potential is almost 6,000 to 7,000 odd crores. and large part of it was serviced through imports. Now it will really trigger that domestic manufacturing, like the way a 20% duty on all the other products have triggered domestic manufacturing. Now the same thing will apply to IFPDs as well.
And at peak capacity, what is it that you can do from this product itself? Currently, it's 200 crores. You have capacity headroom. How much can you do?
My sense is we should be targeting somewhere around, at least in the first year, somewhere around 800 to 1,000 odd crores, if not more.
Okay, and the thing, as you said, the other one is, of course, the personal income tax cut, right? Phone sales has been very sluggish for the last at least 6 months, if not more. We were talking with Ramdevji on the other side. I think he's still with us, and he was saying, I'm wondering where will people spend this 70,000 rupees? Phones definitely is one area as well. Saurabh, thank you very much for joining us. Quick reaction there. Ramdevji, if you're there, if you heard the Dixon management, any thoughts here?
Yeah. I think he was the guy to talk about Dixon. I mean, I think, see, what is happening is market is in too much of a hurry. So you saw the cut, I mean, stock slumped and again came back all the way. I think even markets, the moment fiscal deficit number came to about 4.4, markets sold off.
Yeah.
And then slowly it is recovering to when the thinking is happening that this is actually a positive thing rather than negative, crowding out will not be there. So I think by evening when everything is thought out, I hope there is not much of, between the lines, there are not too many negatives. I would think that market will recover and then it will go back to its own momentum in terms of whatever is happening globally.
Now, you know, Ramdevji, from market perspective, they had two asks. One was that the RBI goes ahead and loosens some liquidity, and hopefully they've done some bit of it, and next week we see a follow-up. And the other one was that the capex spend continues.
Yes.
You have given this budget 10 on 10, 100 on 100 cent marks, so to say it. But you know, don't you think that that little bit of a capital expenditure push is missing, and that would have been actually the cherry on the cake?
Actually in capital, see, right now what has happened in actual, they have not been able to execute what was projected. Say it was projected for 24-25 to be, say, 11.2 lakhs. They are barely able to do 10.1, and I'll be surprised if they can finish even 10.1. You know, because most of the momentum has started only in December. So you are left with only just about 2.5-3 months. So my sense is that they may not be able to even complete the actual what they are talking about. Because it has to be a cash accounting, isn't it? You have to actually execute and pay. So even if government wants and orders are not given on time, which is slipped because of the elections and all, so the next year, again to, make a comeback and spend more than 10-15% would be very tough. So they are being very practical at about 11.2 lakh crores next year's execution. And if they execute full 11.2 next year, I think the momentum in capex would broadly be maintained. And if by chance economy actually recovers to 7-7.5%, they will have enough margin in terms of tax collection. Tax bonds should be very good, and hence they can, in the second round, they can further allocate for the capex. So, but I think the intent is very clear that they'll keep pushing the capex in various segments.
Ramdevji, just one quick thing. I know you don't manage money directly, but you have a defense fund. Defense stocks are all selling off. 4-5%.
Yeah.
Any feedback you've got from your team?
Yeah. No, I mean, Prashant, I mean, I'm just in the studio itself.
Okay.
And see, those guys are also talking to them, understanding. It is very difficult to develop anything. And in any case, it's an excess fund in the sense that it's an index fund. So they have to allocate whatever is the index composition is saying. So per se, in passive funds, you don't have any option but to allocate the way index is designed.
Right.
So to that extent, active manager doesn't have much role to play out there.
Right. We request you to stay with us, Ramdevji. The interesting thing about the way these stocks are moving also is that there is no counterparty today. It's a Saturday, right? So no FIIs. And a lot of these FNO stocks, which had been beaten down, are seeing big spikes. Trent, for instance, is up 8%. DMart, you're talking about that stock, is hit the temporary freeze at a 10% up move.
Oh, wow.
We're seeing big traction on Zomato, up 7.5%. AB Fashion and Retail up nearly 4-5% as well. And you were speaking about ITC, how there has been no tinkering with tobacco taxes. That stock is up just around 3.5-4% in context of the way the market is right now. Look look at something like Godfrey Phillips, that too is up close to around 13.5%. So it's a big move that we're seeing in a lot of these stocks. How much of that is, because of the impact of no counterparty right now? How much of that is on account of the impact of...
Mangalam, but to be fair, the counterparty usually is on the sell side.
Yes.
So they are there.
So which is why the exaggerated up move, right?
That's the
exaggerated up move is what I'm trying
you're
to say.
saying they're up.
There is no
The big seller is away.
The big seller is away, and there is, the F&O impact as well. But
we're seeing some big moves even in the textile, footwear, leather-related names. Look at a Mirza International. We've practically forgotten about that stock. That's up close to about 20-odd%.
So
Campus Activewear, that's another one, as the government spoke about it, right?
They spoke about it. There are two parts to this. One, these sectors, these stocks were beaten down. Secondly, while they're focusing on exports, also remember the rupee is closer to 86.5, right?
That's a tailwind.
So that's a big tailwind coming in for all these exporters. And again, the lack of any counterparty out here as well. So we'll keep an eye out on all of these stocks. But we do have Sandeep Bhatia, who's the MD, Head Equity India, Macquarie, joining us now. Sandeep, how would you rate this budget? Point number one. Secondly, the capex versus consumption debate. Does it shift towards consumption from here on in terms of allocation?
Well, I think it should definitely shift to consumption, and there's no reason for it not to be. I've said this on your channel before the budget was presented, that we need a tax cut up to 12 lakhs of income, and the finance minister delivered exactly on that. So what do I say? I think it meets the prescribed cure for the economy, and to that extent, it's a good job done.
Sandeep, I remember you saying in the morning that Maruti would be a stock to look at if the government chooses to prioritize consumption, which they have. And Maruti is a stock which is up 5.5% because small car sales have been lagging, and that could get a boost. So tell us, the stocks that have, swum into your ken because of the announcements that we've heard in the budget, particularly on the consumption front.
So the entire consumer sector has been a laggard. And again, just for the sake of a proper disclosure, that doesn't mean that one budget will change the entire story of consumption in India. But yes, it's a good 1 trillion rupee or $11.5 billion tax break, which comes to every taxpayer every year, year after year. And therefore, it is a meaningful tax break. Therefore, all the consumption stocks are going to go up, and that's what's happened today. But we should also remember that finally it's earnings that matter. I think the large cap consumption stocks have suffered. Volume growth is in very low single digits, if at all. And these competitive issues or these demand issues, until they are resolved, will these stocks remain expensive. So despite today's movements, and anyway, I think as all the anchors have been discussing, we don't have a fully functional market. On the other side, we don't have the other institutional players, which are the foreigners. We will definitely see more supply of stock come through when the market is fully open on Monday. Okay. So some kind of rationality will come in stock prices then.
Okay, all right. Hi, Sandeep. Always good to speak to you. I recall the last time we chatted, you said that the quick commerce space could have a big potential, but you're fairly cautious on this space. Now these stocks have come off, from the top. You have this bit of a booster shot as well that's coming in there. Still cautious. Zomato now is one of the top gainers as we speak on high volumes as well.
See, today's movement is not a benchmark to change anything on any sector or stock. Okay, right. I think all of us know that. People still ask these questions because that makes good headlines. But I think the whole market is expensive. The whole market needs to correct. I've been saying that multiple times whenever I come on the channel. I continue to reiterate the market needs a correction. But in the near term, let me tell you, I also expect a rate cut on Feb 7. So I think we have to see some positive news on the economy. Yeah. The tax cut has happened, the rate cut will happen. So yeah, in the near term, the market will show some strength, which is fine.
No, absolutely. I was actually going to ask Ramdevji that rate cut. Next is North Block is done. Main Street is next. Ramdevji, 7th of Feb next Friday. Yeah. So what is your sense of
it's very crucial.
Yeah,
not only the...
If you'll get you get more measures, you get a rate cut, you get guidance of maybe a little bit more. We're presuming, but if that were to come, where does that place the market according to you?
See, market, nobody knows, even I don't know what it will do in next 15 days, 20 days, because there's so many players. The foreigners are very large chunk for the short-term trade. So I wouldn't know how they will react. I mean, there is a global allocations and things like that. But as far as our economic performance is concerned, I think the demand, aggregate demand is dependent on the credit flow. So the credit flow has slowed down to more like 9-10%, 10.5%. That must go to 15-16%. And when that will take some time. So I'm sure the economic activity will also take some time. So it might take 2 quarters, 3 quarters before that pickup happens. But the turnaround in the credit cycle, that year-on-year growth from 10% goes to 11, 12, 13, that's what I expect, and that's what even the governor should be indicating in their next policy meetings and things like that.
So, yeah, near term is, okay, just let me put it another way, and we'll ask Sandeep this as well, and I think Hirenvid is also joining us. So Monday morning we come back, Ramdevji, and say we got this weekend tariff risk also, right? Trump's, maybe we wake up to 10%, 20%, we don't know, tariffs. So is that, will there be collateral damage in that sense, or what's your sense?
See, Monday is Monday. We are in Saturday today. Whatever was the activity today, we have taken care of that. Monday will its own balance sheet of activities, whether it's Mr. Trump, whether FIIs, interest rates. I mean, then it takes over, you know. So today's job is like which way the wind is blowing. Today, wind is blowing towards consumption. That's what has happened. And I think market in next 1 hour should take a call.
Ramdevji is the bull. He's given 10 on 10, and he's saying Monday ka baad Monday dekhe.
By the way, he's sounding like a full philosopher. And you're saying Saturday hai, and by the way,
philosopher ne abhi kya kar sakte ho? Matlab, you know, Prime Minister ने सवेरे बोला कि लक्ष्मी जी के आपके पास आशीर्वाद रहेगा middle income group के ऊपर, and that's what she has showered.
Oh, she has absolutely. Thank you very much for your time, though. Appreciate it very much here. And Mangalam and Nigel, you guys always make the point about Fridays and Saturdays and
Saturday and Sunday.
And beverage stocks.
I have,
Radico has moved up 9%.
I have to get Varun beverages actually.
Actually, you know, Rima, I just want, you know, I think we need to check out if there is something that's come on the telecom space, because as we speak, you know, we just entered the studio around 20 minutes or so ago. Idea is a stock that's locked in upper circuit. I think it's up close to around 10% as we speak. And Industars is the other one as well. So both those two stocks, I don't know whether we've got any kind of details with regard to a potential relief or something that the street wants to read with regard to that. But both these two stocks, they are firing away, both of them at the high point of the day as we speak. So we'll wait by Rima as well as, you know, just checking up. And I think our ticker team as well will try to alert with regard to that. Both those
Bharti is not moving. So usually Industars moves when Bharti does because the fortunes are linked. But Bharti Airtel as a stock, if you're looking at pure telecom industry, Bharti is up close to about 0.5%. But yeah, there has been a little bit of an uptick. So we'll try and find out if there was anything in the budget.
All right. Well, let's welcome Hirenvid onto the show as well. Hi, Hiren. Good afternoon and good to have you in. Well, the markets have been seesawing in today's trading session, trying to, you know, analyze this budget. Some would argue that maybe, in fact, we required a bit of a more, you know, push with regard to the capex, while others are quite happy with regard to the consumption boost that we've got. How do you rate this budget?
I think it's a very balanced budget. I think what was lagging was consumption, and I think by giving a tax cut, you've given a push to a part of the economy which was struggling. I also believe that people are not thinking through as far as the capex number is concerned. So I think, you know, on day one, whatever hits you on the face, people tend to react, you know, instinctively. But let me give you some sense on the capex itself, right? So they had budgeted for 11.1. They finally revised that to 10.2.
Yes.
We have the numbers from April to December. The December number was a big number, 1.7 lakh crores, right? If you take April to December, then you have essentially 3.4 lakh crores to cover in Jan, Feb and March of this year, and 11.2 lakh crores in all of next year, which means you have to spend 14.6 trillion rupees in the next 15 months. To give you context, the first 9 months, the average monthly run rate was 76,000 crores of capex. If I now take 14.6 lakh crores, then the average monthly run rate for the next 15 months is going to be 97,000 crores. I don't think people are thinking in no 15-month period have we seen a spending of 14.6 trillion rupees, right? Now, this is obviously assuming that whatever numbers they have given, they are to execute. But if you purely look at the
Hiren, we request you to just hold on to your thoughts for a minute. We do have our colleague Parikshit, who's in conversation with the Commerce and Industry Minister Piyush Goyal. So you might want to listen into this, and thereafter we'll hear your thoughts once again.
Right, joining us right now is Commerce Minister Piyush Goyal to speak to us about Union Budget 2025, the big push for supporting the middle class, startups and the manufacturing sector. Mr. Goyal, how do you think this budget fares in terms of giving more consumption power back to the middle class, because that had been a pain point over the last few quarters?
Well, it's a very transformational budget. It's balanced. Continuity is evident in the budget, but very strategic in its outlook. It has planned a vision very holistically. Now, the benefits given to the middle class. It straightaway results in money in the pocket of the middle class. India has a very rapidly growing middle class with 25 crore poor having come out of multidimensional poverty. You are rapidly seeing more and more people with increasing incomes. Their disposable income becomes much bigger, savings of up to 1 lakh of rupees for all those who are earning up to 25 lakh rupees. And for those who are in a job at 12 lakh 75,000 rupees salary, you have zero income tax. I think it's a very, very big message that so far the government had focused on investment-led growth. Now we will have investment-led and consumption-led growth, which is how developed economies of the world have been created. So it's the right pathway to a developed India.
Sir, there was a concern about India's growth going forward, whether there are structural problems. The CA has said that the growth in this fiscal could be between 6.4 to 6.8%. What is your view on what this budget will now do for growth revival for FY25 and FY26?
My sense is this budget, and the number of elements it touches, whether it's MSMEs, whether it's farmers, whether it's the youth for creating more job opportunities, our startups, creating the right infrastructure mix, monetizing 10 lakh crores worth of assets for reinvestment into the economy, focusing on ease of doing business, the Jan Vishwas Bill 2 also coming in now, working with the states.
मिशन को ड्राइव करने वाला है। ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा। मैं वित्त मंत्री निर्मला सीतारमण जी और उनकी पूरी टीम को इस जनता जनार्दन का बजट, पीपल्स का बजट, इसके लिए बहुत बहुत बधाई देता हूं। साथियों, आमतौर पर बजट का फोकस इस बात पर रहता है कि सरकार का खजाना कैसे भरेगा, लेकिन ये बजट उससे बिल्कुल उल्टा है। लेकिन ये बजट देश के नागरिकों की जेब कैसे भरेगी, देश के नागरिकों की बचत कैसे बढ़ेगी और देश के नागरिक विकास के भागीदार कैसे बनेंगे, ये बजट इसकी एक बहुत मजबूत नींव रखता है। साथियों, इस बजट में रिफॉर्म की दिशा में महत्वपूर्ण कदम उठाए गए हैं। न्यूक्लियर एनर्जी में प्राइवेट सेक्टर को बढ़ावा देने का निर्णय बहुत ही ऐतिहासिक है। ये आने वाले समय में सिविल न्यूक्लियर एनर्जी का बड़ा योगदान देश के विकास में सुनिश्चित करेगा। बजट में रोजगार के सभी क्षेत्रों को हर प्रकार से प्राथमिकता दी गई है। लेकिन मैं दो चीजों पर ध्यान आकर्षित करना चाहूंगा। उन रिफॉर्म्स की मैं चर्चा करना चाहूंगा जो आने वाले समय में बहुत बड़ा परिवर्तन लाने वाले हैं। एक, इंफ्रास्ट्रक्चर स्टेटस देने के कारण भारत में बड़े शिप्स के निर्माण को बढ़ावा मिलेगा। आत्मनिर्भर भारत अभियान को गति मिलेगी। और हम सब जानते हैं कि शिप बिल्डिंग ये सर्वाधिक रोजगार देने वाला क्षेत्र है। उसी प्रकार से देश में टूरिज्म के लिए बहुत संभावना है। महत्वपूर्ण 50 टूरिस्ट डेस्टिनेशन, वहां पर जो होटल्स बनाएंगे, उस होटल को पहली बार इंफ्रास्ट्रक्चर के दायरे में लाकर टूरिज्म पर बहुत बल दिया है। इससे हॉस्पिटैलिटी सेक्टर को, जो रोजगार का बहुत बड़ा क्षेत्र है, और टूरिज्म जो रोजगार का सबसे बड़ा क्षेत्र है, एक प्रकार से चारों तरफ रोजगार के अवसर पैदा करने वाला एक क्षेत्र को ऊर्जा देने वाला काम करेगा। आज देश विकास भी विरासत भी इस मंत्र को लेकर चल रहा है। इस बजट में भी इसके लिए भी बहुत महत्वपूर्ण और ठोस कदम उठाए गए हैं। 1 करोड़ पांडुलिपियों के लिए संरक्षण के लिए, मैन्युस्क्रिप्ट के लिए ज्ञान भारतम मिशन लॉन्च किया गया है। साथ ही भारतीय ज्ञान परंपरा से प्रेरित एक नेशनल डिजिटल रिपोजिटरी बनाई जाएगी। यानी टेक्नोलॉजी का भरपूर उपयोग किया जाएगा और हमारा जो परंपरागत ज्ञान है उसमें से अमृत निचोड़ने का भी काम होगा। साथियों, बजट में किसानों के लिए जो घोषणा हुई है वो कृषि क्षेत्र और समूची ग्रामीण अर्थव्यवस्था में नई क्रांति का आधार बनेगी। पीएम धन धान्य कृषि योजना के तहत 100 जिलों में सिंचाई और इंफ्रास्ट्रक्चर का डेवलपमेंट होगा। किसान क्रेडिट कार्ड की लिमिट 5 लाख तक होने से उन्हें ज्यादा मदद मिलेगी। साथियों, अब इस बजट में 12 लाख रुपए तक की आय को टैक्स से मुक्त कर दिया गया है। सभी आय वर्ग के लोगों के लिए टैक्स में भी कमी की गई है। इसका बहुत बड़ा फायदा हमारे मिडिल क्लास को, नौकरी पेशे करने वाले जिनकी आय बंधी हुई है, ऐसे लोगों को, मिडिल क्लास को इससे बहुत बड़ा लाभ होने वाला है। उसी प्रकार से जो नए नए प्रोफेशन में आए हैं, जिनको नए नए जॉब मिले हैं, इनकम टैक्स की ये मुक्ति उनके लिए एक बहुत बड़ा अवसर बन जाएगी। साथियों, इस बजट में मैन्युफैक्चरिंग पर 360 डिग्री फोकस है ताकि एंटरप्रेन्योर्स को, एमएसएमईज को, छोटे उद्यमियों को मजबूती मिले और नई जॉब पैदा हो। नेशनल मैन्युफैक्चरिंग मिशन से लेकर क्लीन टेक, लेदर, फुटवियर, टॉय इंडस्ट्री जैसे अनेक सेक्टर्स को विशेष समर्थन दिया गया है। लक्ष्य साफ है कि भारतीय प्रोडक्ट्स ग्लोबल मार्केट में अपनी चमक बिखेर सके। साथियों, राज्यों में इन्वेस्टमेंट का एक वाइब्रेंट कॉम्पिटिटिव माहौल बने, इस पर बजट में विशेष जोर दिया गया है। एमएसएमईज और स्टार्टअप के लिए क्रेडिट गारंटी को दोगुना करने की घोषणा भी हुई है। देश के एससी, एसटी और महिला जो नए उद्यमी बनना चाहते हैं, उनको 2 करोड़ रुपए तक के लोन की योजना भी लाई गई है, और वो भी बिना गारंटी। इस बजट में न्यू एज इकोनॉमी को ध्यान में रखते हुए गीग वर्कर्स के लिए बहुत बड़ी घोषणा की गई है। पहली बार गीग वर्कर्स का ई श्रम पोर्टल पर रजिस्ट्रेशन किया जाएगा। इसके बाद इन साथियों को स्वास्थ्य सेवा और दूसरी सोशल सिक्योरिटी स्कीम्स का लाभ मिलेगा। ये डिग्निटी ऑफ लेबर, इसके प्रति, श्रम एव जयते के प्रति सरकार के कमिटमेंट को दर्शाता है। रेगुलेटरी रिफॉर्म से लेकर फाइनेंशियल रिफॉर्म्स, जन विश्वास 2.0 जैसे कदमों से मिनिमम गवर्नमेंट और ट्रस्ट बेस्ड गवर्नेंस के हमारे कमिटमेंट को और बल मिलेगा। साथियों, ये बजट न केवल देश की वर्तमान आवश्यकताओं को ध्यान में रखता है, बल्कि हमें भविष्य की तैयारी करने में भी मदद करता है। स्टार्टअप के लिए डीप टेक फंड, जियोस्पेशल मिशन और न्यूक्लियर एनर्जी मिशन ऐसे ही महत्वपूर्ण कदम है। मैं सभी देशवासियों को एक बार फिर इस ऐतिहासिक पीपल्स बजट की बधाई देता हूं, और फिर एक बार वित्त मंत्री जी को भी बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
All right. Well, that's our Prime Minister Narendra Modi seemed pretty pleased with the budget that was just announced. Well, let's take a couple of other pointers that the street has been debating about, and that's the insurance stocks. They've been all over the place. To help us out with, the first take with regard to the insurance companies, we have Ms. Vibha, the CEO of HDFC Life, who joins us on the show. Hi, Vibha. Good afternoon and good to see you, and thanks a lot for joining in. Well, one factor is been on with regard to the changes in taxation, particularly for the new structure, and the other one is on ULIP. Let's take the first point first. Since there will be some kind of leeway given, particularly on the new structure, the fear is that it could result in fewer people taking insurance, and in that regard, hitting your volumes. What do you have to say with regard to that?
Couple of points here, and thank you for having me on this show. The first point is it's widely available data that almost 70% of taxpayers have moved to the new tax regime. That is the first data point. Second data point is with our own policy holders, less than 2%, our analysis shows that less than 2% are dependent on tax, or tax being a reason for them possibly buying life insurance. So really a non-material number, and even that would reduce as we go along. So we have moved a long way from a tax being the reason. This might have been certainly the case a decade ago, but now given innovation in the sector and many other products and emphasis on more and more of protection, I think at least certainly for HDFC Life, but I think even broader for the sector, just given the number of people who've moved away into the new tax regime, I don't think that is really a dampener in any form or shape.
Well, that's heartening to hear, actually, Vibha, not just from a market perspective or from a policy perspective, but people are taking insurance because of, for the core interest with regard to insurance, not because of, tax exemptions. Yeah, Prashant?
No, Vibha, hi, afternoon, Prashant here. So you're saying that 2% of just, 80C roughly contributes about 2% of the new individual premium. That's what you're saying?
ATC is overcrowded, as you know, Prashant. There are many things, and if you're salaried, in all probability, when we do an income proxy, we know that even if they did not buy life insurance, their contribution to provident fund, other things, ELSs and so on, would have consumed or utilized ATC anyway. So that was not the primary reason or the reason at all for them buying life insurance.
The other change was this redemption of unit-linked schemes, right? And there, for a brief period, there was a misunderstanding. There was a little bit of fear that maybe, you know, it's being taxed at capital gains. But then clarity, Yash told us that it was being added to your income tax, charged at the marginal rate. Now actually it is going to be taxed at 12.5%, which is the capital gains tax. Is that the correct interpretation?
Yeah, absolutely, and actually it's significantly better. So let me just deconstruct, the somewhat of a misunderstanding in terms of what was intended. First of all, the language, and I'm just referring to the language mentioned by the FM, is bringing clarity in income on redemption. So it was to bring clarity and not to introduce anything new, anything that was significantly adverse. Now, post 2021, 1st of February 2021, there was a cap of 2,50,000, and anything above 2,50,000 annual premium was taxed, and it was taxed and continues to be taxed as capital gains tax. Up to 2,50,000 was tax-free. Now, before the policies that were sold before 1st of February 2021, if they adhered to certain conditions, for example, number of times of the ratio of premium to sum assured, then it was completely tax-free, regardless of the quantum. However, there were some other policies that didn't satisfy this multiple of sum assured, and they were being then taxed and continuing to be taxed until today at the highest marginal tax rate. So all that the provisions now unveiled are going to do is to simplify it, to say that anything that is not compliant will now be taxed under capital gains tax, instead of all this hybrid of earlier was the marginal tax rate and so on. That's all there is to it.
Okay.
And just to add on that, if you were to look at, say, hypothetically, if I had bought a policy before February 21 and say I had only a 6 times sum assured, then that would have not been even then eligible for under Section 1010D. And so I would have been paying at highest marginal tax rate. So if a taxpayer has been paying or would have paid a maturity proceeds at 30% tax, now it will be at a capital gains tax rate at 12.5% tax. So actually there is a benefit for those policyholders that would have bought their policies before 21.
Okay. Ma'am, the third important announcement from the insurance sector is opening up the sector to 100% FDI. Will it impact listed players like you, one? And two, how does this change the competitive dynamics? Would some of the unlisted players now get that 100% FDI and therefore become a lot more competitive and aggressive?
While I welcome 100% in insurance, being pragmatic, even when it went up to 74%, it's not like there was a lot of money flow. What could happen is there could be some foreign insurers or foreign investors for whom it's either 100% or it is zero. It could attract people like that, or if they want full control and don't want a partner, say if their brand presence as an insurer somewhere else is extremely strong. But barring that, will it make a huge change in dynamic to the competitive intensity? I don't think so. I think what is really important is some sort of regulatory certainty. I think that is the biggest aspect that will attract flows into the, why only insurance sector, but any sector really. And that's really what could be a game changer in terms of certainty on regulatory outlook.
All right. Thanks a lot, ma'am, for joining in and giving us all your views on this space, assuaging some of the fears that the street had with regards to shift into the new tax regime and that impacting business for you as well. But, meanwhile, while this conversation was on, there was a lot of fear in the jewelry space that will there be any increase in customs duty for gold once again or not? There has been a notification, but there is clarity as well that there is no specific change coming in for gems and jewelry sector. tariff line that has been introduced is largely to differentiate between gold, which is imported in bar forms, and the other forms. Most of the gold imported in the country right now is in bar that were being imported as well, and that had an impact on the overall equilibrium of the market. So this tariff is on the non-bar dip on names like Titan and Kalyan Jewelers. We'll just keep an eye out on that. The clarification that has come, there is no specific change for gems and jewelry sector. With us, Hiren, thank you for waiting patiently, hearing out all the conversations that we've been having on the channel so far. But you were making a point on capex that the street may have consumption stocks from here on as well.
Yeah, so just to complete the capex point, right? I mean, as I mentioned, if you look at the data for the gives you a run rate of about 76,000 crores a month. They now have put that by March end, they will spend 10.2 as up to 11.2 lakh crores for the rest of the 12 months.
Yes.
Which means that in the next 15 months, you will have to spend at the run rate of 975,000 crores that you spent in the first 9 months of this year. That is actually a 30% increase, right? But as I tend to react very spontaneously, very clearly, the big delta of this budget is the push given to consumption. For it's very apparent in the consumer stocks. And I believe that rightly so, most of them have been bid up. But even there, I think that to the point that, Sandeep also made, is that substantially going to change the volume growth for the FMCG companies? We have to wait and see. But clearly from a sentiment perspective and the fact that the biggest needle has moved in terms of consumption, we are seeing a significant rally in consumer stocks as well.
Okay, got that, Hiren. Thanks a lot for joining, Hiren, and giving us your initial take with regard to the budget. But Sandeep, before we let you go, one final question to you. I recall when we chatted the last time around, you were not ruling out further downside. Maybe a 10% correction is something that we could be bracing for. We almost got that, and we have bounced back in the last few sessions. What do you think? Budget is already done now. I mean, most of it is done. That we'll have the RBI. Hopefully, they inject some liquidity. But on ground, sentiment is still a little bit subdued. Earnings really haven't picked up. So what's your take for the remainder of this year with regard to the Nifty's moves? All right, Sandeep, I think you're on mute. We'll just try to... Yeah, Sandeep, you're on mute. If you could unmute yourself.
Yeah.
Please go ahead, Sandeep.
So remainder of the year is some time away, but we are on 1st Feb today. I think in the near term, the market will have some legs and strength. I do expect a rate cut. I do expect liquidity injection to happen, and all that should be good news for the market in the near term. The earnings picture is not going to be as buoyant as the policy announcements and the rate cuts that I'm expecting. And around the earnings season, again, there could be weakness. That's what I expect. I think the real turning point for this market is how the meeting with President Trump and PM Modi goes in February at the White House, and if India can continue to work, which I do expect with the US, and that would be good news for the markets, and that would be a more longer-term positive picture. But in the near term, earnings will continue, and lack of earnings will put pressure on the market, and that remains unchanged.
I mean, that's interesting. That meeting, the stakes are rising. Prime Minister Modi and Donald Trump, and what can come out of it, some sort of an agreement. I mean, it's certainly a break from the past. Which way is the break going to be is the question. Sandeep, thank you very much for staying with us and, of course, taking all those questions. And we look forward to our next conversation. Thank you. We'll take a quick commercial break here. We'll come back. Nilesh Shah of Envision comes back. You heard from him pre-budget. So he'll give you his take on what we've seen. And we'll also have Shardul Shroff joining in and that is going to be a broader conversation on what Mr. Shroff has made of the budget. Stay tuned, coming back.
Welcome back. Absolutely unchanged on the benchmark indices, but railway stocks are tumbling hard and fast. Ircon down 8%, RVNL, IRFC, Jupiter Wagons seeing cuts anywhere between 6 to 8%. And these are stocks which have fallen 30 to 50% from their 52-week highs in the last couple of months. That said, stocks like RVNL have gone up 1,000% in the last 3 years. They've had a massive run up. They've undergoing profit booking. And in the budget, there is no increase in the railway capex for FY26. And that has disappointed the street. For defense, there has been an increase. But for railway capex, it's absolutely unchanged. And the street is a bit disappointed. As we said, the stocks have had a big run up. RVNL, for instance, is up 1,100,000 or 1,100% in the last 3 years. Nilesh Shah, MD and CEO of Envision Capital, is now with us on the show. Nilesh, thank you for joining in. So outside of the big thrust on consumption, tell us, are there any other portfolio plays that you would recommend post the budget?
So, apart from consumption, I clearly believe there's one sector for which budget has been positive is the insurance sector. And I say this because first, of course, is the overall FDI limit has been raised to 100%. Which was widely expected, but nevertheless, that gets confirmed. So that's, I think, a key proposal. The other thing going positive for the insurance sector is that given that the tax exemption limit has been raised for the middle class, the post-tax take-home or the post-tax disposable income goes up. That gives them a lot more leeway to spend on healthcare. And within healthcare, clearly health insurance is a priority. So clearly believe that outside the core consumption space, the discretionary consumption space, I think one sector which benefits trade because of this clearly is the insurance space. I think there's a lot for the sector there.
Enough for you to increase your allocation to insurance if you have a medium to long-term view?
Yeah, I clearly think it should be part of it. And we've essentially been liking more the insurance distributor, the insurance platform company, and not the standalone insurance companies. But maybe with these developments, we'd probably take a hard look at some of the standalone insurers, especially the health insurers. That space is interesting. Some of them have essentially kind of been very aggressive in the underwriting, realizing mistakes. There has been a course correction. In some cases, stock prices have also corrected sharply. So clearly, I think we remain constructive. So maybe it's time for us now to start looking at standalone health insurance companies as well.
There's Star Health and others as well. We have Mr. Shardul Shroff as well, Executive Chairman of Shardul Amarshal Mangaldas and Company. Mr. Shroff, good afternoon. Thank you very much for joining us on this important day. What are the key points? I mean, there's of course the personal income taxation, but from a corporate perspective, we heard a lot of stuff on focusing on ease of doing business, etc. What are the top 2 or 3 things which really will make an impact? Maybe not on day one, but which you think are meaningful?
I think the fact that ultimately the income above 24 lakhs will get uniformly taxed at 30%, and that has an impact on the consumption budget and the capital budget for the middle income group. Now, as far as the corporates go, clearly 2 things which matter are the new Income Tax Act, which is expected in the next week. That's what she said in her budget speech. And she has also indicated that the Income Tax Act would be reduced to half its current form. Now, this is an interesting development because you're having a significant change in the law. I hope they don't bring in new stuff, because I've been just reading her speech and there is a lot to be said in relation to the speech. I understand that there's a changed definition of capital asset for the purposes of capital gains. I'll have to pay focus to that. And the other change which is happening is going to be the decriminalization of laws. About 120 laws still need to be decriminalized. And that is something which you will see in the context of how the law is simplified. This budget is a budget which has a simplification as a norm. And besides the Income Tax Act and besides the decriminalization, I think the compliance aspect for small charitable institutions, the fact that ease of doing business has been made part of the budget, the fact that the laws which have become obsolete and which some years ago the government had scrapped by a single bill, all these changes will have an impact on the corporates.
No, absolutely. Mr. Shroff, quick comment today, but I think you'll come back for a more extensive chat over the coming days as we sort of go through and pour over the budget. But for now, let me cut across to my colleague Shireen, who's in conversation with Mr. Hardeep Singh Puri, the Petroleum Minister. Shireen, over to you.
Well, thanks very much, guys. Yes, joining us now live and exclusive here on CNBC TV 18, the Oil and Gas Minister, Mr. Hardeep Singh Puri. Mr. Puri, many thanks for joining us here. As I've been pointing out, Mr. Puri, it's been a focus on... We'll just get him in a second. But of course, as far as the oil and gas sector in specific is concerned, you can see the oil marketing companies under pressure. And that is largely on account of the fact that LPG under recoveries have not been factored in. So that has not been allocated. And that is what we will seek more clarity on. But that's the impact as far as the OMCs are concerned. That is the call there for the oil marketing companies on the under-recovery side. But, stocks like RVNL, etc., also under pressure. And that's largely RailTel, largely on account of the fact that it's pretty much status quo as far as the railway capex is concerned. And overall, the capex is at about 11.21 lakh crore rupees. Prashant, we'll come back to Mr. Puri as we get him to join us. But for now, I'll hand it back to you.
I think, Shireen, just one point that you'd like to make. Mangalam just made that point with regard to clarification on gold. And, Titan was the stock that had taken a hard knock. Kalyan Jewellers as well has taken a hard knock. And Mangalam essentially said there's no big change. Just take a look at those stocks. In the last 10 minutes or so, Both of them have seen a big recovery from the lows of the day. I think Titan was down close to around 3% or thereabouts. That's recovered. And Kalyan Jewellers, I think Mangalam was down 4% odd. So big recovery. The street is taking note of that clarification.
Yeah, you know, this market currently has been a trader's paradise. If you look at the way the stocks have moved, we earlier saw the way the reaction was on Dixon Tech.
Yes.
There was, you know, Vodafone Idea, all of them surging, and thereafter they've been sold into as well.
Insurance today.
Insurance as well. All of them. It's been all over the place. So similar is the case that has taken place on, you know, the jewelry space as well. The street was looking at, you know, a proposed increase in the alloys of gold. Anything which has less than 99% pure gold or silver will be, they will be a tariff of 10% imposed on that. That was mainly to differentiate, you know, or put in at par the gold alloy imports versus gold bar imports. Gold bar imports, there was always a certain, you know, duty, and as a result of there being no duty on alloys, you know, there was this arbitrage that was playing on, and now that there has been just normalized. So nothing specifically changes for these companies, and after that big decline, we've seen a recovery, subsequent recovery as well.
Absolutely. I think, you know, markets all told with about, what, 15-20 minutes to go are just about 15 odd points lower, right? I mean, that's essentially the story by close, and it's been true for the last 2-3 budgets now. The close has been absolutely inconsequential. Flattish has been the close. I think we can toss it back to Shireen. She's got Mr. BVR Subramaniam, Chief Executive Officer, Niti Aayog. Shireen?
That is right, Mr. Subramaniam. Many thanks for joining us here on CNBC TV 18 to start with, you know, what the budget delivers on in terms of growth. What are the big takeaways that you read into as far as the budget is concerned?
Okay, I've been hearing a lot of comments on the budget since morning. First of all, it's an outstanding budget. It supports growth. It will accelerate growth. It addresses all the choke points or all the bottlenecks which will hinder growth. But one point I think a lot of people are missing. If you see the fine print, the GDP of India next year crosses $4 trillion. It's 357 lakh crores. That translates to $4.1 trillion. The budget has been a very finely balanced act. They've addressed both the consumption side as well as the supply side. And I think that's remarkable. And all that has been done, but there has been fiscal compression, both on fiscal deficit and also some tax giveaways to the middle class. When about 2.5 lakh crores is the compression that has been done in terms of either less revenues or cutting the fiscal deficit. So I think we must actually compliment the finance ministry, the finance minister, and the team working with her to produce a budget like this. If you want, let me just tell you what the macro picture is. It's a very simple budget. About 50 lakh crores is the expenditure, 35 lakh crores is the revenues, and 15 lakh crores is the deficit. That's 4.4%. She's cut the fiscal deficit from 4.8 to 4.4%. I think it's a solid signal to the external world that India is for fiscal prudence, India is for fiscal stability, and I think it's an excellent signal to the global investor community that while we promote development, we promote growth, and we are going to invest for the future, we will also manage our fisc very, very efficiently, prudently. And the big thing is, this is a budget for Vikasit Bharat. First thing, this budget has to be actually read along with the previous budget. We must understand these two budgets have come with a gap of 6 months. So I think that budget addressed some issues like skilling, employment. I think that was the big focus. If you look at this budget, the big focus here is 2 or 3 things which are, you know, very, very apparent. Number one is manufacturing. I mean, it's out there, up there, a national manufacturing mission, an export promotion mission. There's some things which he didn't speak, but you need to read the print and, you know, see the schemes. There is one for industrial parks. There is one for industrial housing. There are a whole host of things there. So I think manufacturing and exports is one big leg of the mission. The second one is actually agriculture. India, a lot of people don't realize, has actually more agricultural land under cultivation than any other country in the world, including the United States. And she said that very correctly. India can be the food basket of the world. And I think there's a lot of stuff there to support. I think she's mentioned they've drawn inspiration from the Aspirational Districts program, 100 districts for one program, 100 districts for the other program. And I think that's a big, big takeaway. The third thing, and which is again something which people don't think about very quickly, it's the focus on cities and urban. I mean, that's almost 8 or 10 paragraphs in a speech only on cities and urban. Now, if that is not infrastructure, what it is? It is also infrastructure. And in cities, they're putting aside a 1 lakh crore urban growth challenge fund. I mean, that is for cities as growth hubs. This is not metros. This is for other infrastructure which cities need. And I think this is something which is going to be a very, very big landmark initiative. The other thing, which I don't know how many people are noticing it, the mention of a nuclear mission, a nuclear power mission, and 2 commitments to amend the Atomic Energy Act and to amend the Civil Nuclear Liability Act. This and the boost in budget to the Science and Technology Department. It's about 25,000 crores which is going for science and technology. That's larger than the increase in allocations for many other areas. So I think these are 4 or 5 big areas in which the budget is actually focusing on. And on the supply side, one thing, the investment in human beings, I think that's big. Education, healthcare, women, children. I think there's a huge increase. If you look at this whole as a group, it's about a 45,000 crore increased allocation for all these put together. I mean, this is investment in people because they're all part of the supply chain. The demographic dividend, if it has to be exploited, if that has to be taken advantage of, you need to invest in people. And 47 looks far away, but for the child being born today, that child is going to be the workforce of 2047. I think that investment is going in.
One of the other aspects of this budget, sir, has been a lot of focus on getting the centre and the states to work together, whether it is to do with the identification of those 50 tourist destinations where the government believes that the centre and the state should partner and work together, or on many of the other aspects that the government has also spoken on, including putting out a competitive index of states and how they are performing in the context of ease of doing business and deregulation, something that we've seen previously as well. On this centre-state compact, how far does the budget take us and how effective do you believe it's likely to be in moving the needle?
I think there is a huge amount of work. I mean, if India has to be Viksit Bharat, then I said this is a budget for Viksit Bharat. There has to be lifting jointly both by the centre and states. And if you see the Urban Challenge Fund, the monies have to be spent by states, which means they have to actually come up with proposals, and the government will match it. They've said they'll give a 25% grant, and they're pushing states towards PPP and private participation. They said almost 50% of that has to come from banks, bonds, or PPP. There's the other one, the one on a couple of other missions which are there. The one on agriculture, the 2 missions there depend totally on state governments. The one on industrial parks, again, industrial parks have to come from state. There is one on industrial housing, again, it has to come from state. So there are a large number of initiatives there which are actually funding states, apart from the 1.5 lakh crores which is for the long-term capex loans. This requires states to get their act going. And I think NITI also will have a role there in actually helping states projectize ideas and bringing them so that they can be funded by various ministries. So I think the centre-state compact is coming through very, very strongly. Apart from, I mean, the total devolution going to states in this particular budget is about 25 lakh crores, of which only 15 lakh crores is actually Finance Commission related grants. The other 10 lakh crores is central or centrally sponsored scheme related transfers. All these require states to also get their act going. Even on the reform side, there is this mention of this committee, a high-powered committee on regulatory reforms. There's a clear mention there that the states will also have to be brought on board. I think this also has to be read with the economic survey which was produced yesterday by the CA. The clear mention, let's get government out of the way. I think that's the message there. And when we talk of government there, it is not just central government. I guess 80% of that is state government. Land, labor, electricity, utilities, water supply, roads, they're all state issues, state subjects. So I think this budget not only moves the needle forward on things like manufacturing, agriculture, etc., it also brings to the forefront that center and state has to work together, and they're putting the money to actually enable states to do what is required to be done. This is on the growth side. I'd also like to mention one thing on the tax side. This is actually addressing, if you've been reading the media for the last couple of months, general talk about, it's on the demand side, there's a lack of consumption demand, etc. I mean, putting 1 lakh crores into people's pockets, and the middle class actually have a very high propensity to spend. This money is not going to go into bank accounts or, or fixed deposit. It's going to circulate in the economy. And it'll also have a huge multiplier effect. So I actually see this addressing one major side of the demand equation. Similarly, I think the capex, I mean, it's remarkable that while there's this fiscal compression, 1 lakh crores given away in taxes, 1.5 lakh crores compression as far as fiscal deficit is concerned, you're still able to keep your capex. It's 3.1%, as good as it can be, and you're also incentivizing states to the 1.5 lakh crore thing. And other thing is, she didn't mention it in her budget, but you need to read the numbers. I mean, the investment in railways is being maintained. The investment in roads is being maintained. And you see the additional focus now on cities, which is also infrastructure. We don't forget that, we tend to forget that cities are as important as railways and roads. And I think this is the future. We are rapidly urbanizing, and the budget is investing in high quality urbanization.
High quality urbanization, consumption, and of course growth. The budget ticks all boxes. It's an outstanding budget. Those are the words of the Niti Aayog CEO BVR Subramaniam, and also lays down a framework for a deeper center-state compact. Mr. Subramaniam, always a pleasure. Appreciate you joining us here on a big day on CNBC TV 18. Thanks very much for your insights and for your opinion this afternoon. Well, we're almost getting to the point of the market close. Prashant, Nigel Mangalam, back to you.
All right, Shreen, thank you very much for that. That's a very interesting conversation there. Markets are down 30 points. There is about, I think, 13 minutes to go as far as closing is concerned. I mean, the trends largely hold. Maybe there is a bit of moderation which has happened in prices, but it's largely consumption. And Mangalam Trend, Maruti, Tata Consumer, Eicher, Bajaj, ITC, Mahindra, Asian Paints, there is not one single infra type name there on the gaining side.
Take that point, and it's been a long time since these names were gaining as well, right? So their time, perhaps, as they say in the movies, apna time aa gaya for the consumption stocks itself. And while we speak about consumption, low ticket urban, mass consumption itself, some of the urban mass premium consumption is doing as well too. If you're earning more than 25 lakh rupees and you're saving 1.1 lakh rupees on a annual basis on your taxes, what are you buying? Are you looking to buy some luxury watches? Look at Ethos. That stock too has been down in the doldrums from the highs and now suddenly up around 10% So not only are you eating pizzas, a 9% up move is what we're seeing on Ethos as well.
Real estate is the other sector which is doing very well. The real estate index is up more than 3%. Macrotech 6.5%, Prestige up 5%, Parsvanatha, Sobha, DLF all gaining up. So
I don't know if you save more than you drink more also, because you have United Spirits, United Breweries, both of them at the high point of the day, Mangalam. So
urban consumption, all of that doing extremely well. So what we'll do is, while all these consumption-related names are doing well, you're watching us here on CNBC TV 18, but not only on the television. CNBC TV 18 is the #1 business news outlet on YouTube as well, the most viewed channel on budget day among the English business news outlets. CNBC TV 18 clocked more than 3.3 lakh concurrent views on YouTube. This is nearly 3 times more than our nearest competitor. CNBC TV 18 remains your budget headquarters for the last 25 years. And for that, we have no one but you to thank. All you viewers, thank you for your continued support, not only on television, but on digital, and as we speak, on YouTube as well.
Okay, no big change on the market screen, just 40 points lower on a 23,000 near 500 kind of index. So gains largely intact, which the market has accumulated from the lows that we've seen last Monday. So this is, of course, just a couple of minutes to go before we wrap up things this Saturday afternoon. Shardul Shroff, of course, has been very patiently waiting by. Shardul, I trust you heard the Niti Aayog CEO speak with my colleague Shireen, and very interesting, forceful remarks. I mean, this is the budget for Vikasit Bharat. But that is one. But the other thing is, there was some at the margin, not widespread, but some fear, especially after the economic survey and what we heard from the CA as well, that 7-8 years now, a corporate tax rate went down from 35% to 25%. And there was a table in the economic survey yesterday as well. Job addition has been anemic, absolutely anemic. So, organized, well-paying jobs, I mean. And that maybe the government will do something to correct that. But what they've done is, of course, lower taxes on the personal income tax side.
Correct.
On the corporate side, thankfully, nothing.
Yes.
You think that's an area of focus going forward?
I think the fact that corporate taxes don't go down is the manner in which the deficit is kept, intact. You have the FRBM and you have to maintain the deficit level below 5%. So not decreasing the corporate tax has the benefit of, continuity in terms of taxation. Not reducing the HNI income also has the ability of raising the revenue bucket. And I think all in all, it's a good budget.
Shardul, thank you very much for joining us. Appreciate your time here on CNBC TV 18, and we'll speak again. But good conversation after a long time. Prakash is back with us to wrap things up. There's 4 minutes to go for close. Prakash, some of the moves that we're seeing is all local investors, foreigners, of course, absent today, holiday. Some of these moves on consumption, etc., will last. As Mangalam was saying, there's no counterparty in that sense today.
Absolutely. So these are just gimmicky things. You get some names, you want to kind of trade on that, and you made money on both sides today. So even if you sold, you made money. You bought, you made money. A lovely market, but.
And at times in the same stock.
Absolutely, and that shows that it's so indecisive. And it'll take some time because consumption is not something which will change numbers overnight. So and there's no point buying into the dying moments of the market and say, oh, this is the last day you get to buy. But consumption makes sense. So you could choose so many things out of that because everything is undervalued from a relative perspective.
So if you could, just give 3 stocks after today's budget that people should look at.
So let me give you names which, of course, you could do it on Monday, but think about it.
Today.
I was talking about tourism. Medical tourism is trying to make a comeback, and Thomas Cook, for example, is one of the names that tried doing this some years back. People have more money; they'll take tours, travel. You buy Indigo, you buy ancillaries in airlines, you buy an updater services. The gig economy plays kind of support you. All these new airports, 52 new destinations, you'll need people to work and ground services and so many things. So that's the way to look at it, saying which pockets of consumption are either too underinvested or underowned, and you'll be able to find a whole list in the value chain. It might not just be just prominent names, but that's what we've been doing. So mining, there's so much being talked about mining. You have AI engineering, Tejo, these are pure mining equipment guys. So that's where a lot of capex will get directed eventually. So I'm sure we have enough to do, and we'll have to wait for 7th of Feb to really see some decisive moves, but we'll discuss more on Monday.
By the way, Vishal Mega Mart is also one of the consumption plays and affordable consumption plays, and that's up nearly about 7-8%. And NIIT, given the focus on skilling, NIIT Limited has moved up close to about 7%, and Zensar, sort of an unexplained move, but that's up nearly about 10.5%, and pretty good volumes today on that.
Right, so let's, I guess, wrap it up on that.
But I think Prakash put it nicely, gimmicky. I think that's the word he used, right? And I think that nicely summarizes, at least not all. I mean, there is, of course, a boost, no doubt. It's positive consumption.
In the long term, it's going to be very favorable, but right now you just keep throwing some balls in there.
Animal spirits are they unleashed?
it's good if it's not only on one day. Let it build up.
No, I'm saying, does the budget unleash the animal spirits?
Not yet, not yet. No.
All right, so we'll, let Prakash hold on to his thoughts, maybe take the Sunday off, speak on Monday once again, as Ramdev ji said. Monday is Monday.
It's a tamed animal for now.
Unleash himself over the weekend.
Unleash himself over the weekend as well. So, let's wrap it up with the consumption stock doing extremely well. Nothing to show for on the Nifty. Just a 40-point downtick. If you looked at just the open and the close of the market, it wouldn't look like it's the budget day. But if you looked at the consumption stocks, it would look like, okay, apna time aa gaya. Is that how one would summarize the day?
Well, that's right. And if you looked at the railway stocks, you would say it was budget day because nothing came to them. And all those stocks, in fact, they went home with sharp cuts. Ircon was down close to 10%, RBNL down close to around 10%, IRFC as well. And actually, we got used to it in the last few budgets that something will come for the railways. This time around, they missed out, as Mangalam said. Consumption was the top gainer. You had some of these economy-facing companies, capex, defense, all of them did sell off in today's trading session.
Just one thing, guys. Mangalam said that this did not look like a budget day. Actually, if you go by the last two budgets, this looked exactly like the budget day on the Nifty. The reason is February 2024, which is before the election, right? The budget Nifty closed down 0.1%.
That was the interim budget.
Final July 2024. Minus 0.1.
Again, that was the first small budget.
And guess what? The change is 0.06% today. So in that sense, and I mean, go back to 2023 as well. I mean, 0.3% lower. So actually, last three budgets, there has been less than 0.5% change on the day of the budget. And actually, even intraday, the moves. I think today the intraday move is about I don't know, 1.25%, 1.5%. But otherwise, it's been largely. Maybe not even 1.5% today, but it's been very quiet on budget days for the last three, and I think now for the fourth budget as well. So I think we're done for the day. Markets ending slightly lower on a very, very kind of a tentative note, but not very much to take away one way or the other. Consumption, the clear leader, and of course the headline from the budget was the personal income tax cuts. And that too not without drama, because as the finance minister initially announced that 4.4 fiscal deficit number, markets assumed there's not going to be too much in terms of help on the taxes front, but she saved the best for the last with that personal income tax relief, which is amounting to about 1 lakh crores or so. From all of us here, it's goodbye. Thank you very much for watching. Rima.
Well, and before we go, let's just quickly tell our viewers that CNBC TV 18 is the #1 business news outlet even on YouTube. It's the most watched channel today on Budget Day among all the English business news outlets. So CNBC TV 18 has clocked in more than 3.3 lakh concurrent views on YouTube. And this is more than 40 times than our competitor. CNBC TV 18 continues to remain your budget headquarters for the last 25 years, and we would like to thank all our viewers for that. Thank you.